Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame bullish scenario where we're looking for a triple 1-2 for then continuation to the upside in a bigger wave 3. And that is important because after a triple 1-2, you really want to see a very big wave 3 to the upside, high impulsivity, big candles, big volume. But as you can see, we already got a retracement here, which is not what you like to see in this particular scenario, as you definitely wanted to see more continuation. Also, something to note is that preferably in a triple 1-2 scenario, you have the wave 1s building up in a contracting diagonal structure for then a push towards the upside, where the second wave 1 takes the high of the first wave 1 and the third wave 1 takes the high of the second wave 1. Now, as you can see in this scenario, the second wave 1, being the green wave 1, did not take the high of the first wave 1 over here. If you also pull trend lines between the green 1-2 and the blue 1-2, then you can see it's an expanding structure and not a contracting structure, which is also less common, lowering the probabilities for this particular scenario. If we look at the blue 1-2, then the blue wave 2 over here retraced to the 886, taken from the low to the high of this wave 1, which is a rare target for 2, common target for B or X. Any move coming from the 886 has a higher probability than to be a C or a wave Y, which increases probabilities for a move down. And this wave 1 here is very, very short in time compared to this wave 2, which is also something we do have to keep in mind. Now, the invalidation of this scenario is price moving below the yellow 2 over here, but officially actually the invalidation of this scenario is below the blue wave 2, of course, because you don't want to see price going below this blue wave 2 at 34,530. If we then go to the second bullish scenario, this one looks a little bit better, at least, where you have a wave 1, 2, 1, 2, and then you look for continuation. But again, you're looking for continuation, not then another 1, 2 over here, right? Preferably, price just moves towards the upside. And of course, the second wave 1 is still lower than the first wave 1, which is something that we do have to keep in mind. In the two bearish scenarios that I'm going to show you, the first one is a flat scenario that I thought of last night, where we're then looking for an ABC, A being a double zigzag. This in wave B is a zigzag over here and an ABC, so a diagonal in wave A, three-wave structure in B, and this push to the upside is a very nice wave C, reaching the target area for wave B for a regular flat, which is a 335 between the 09 and the 105 for B is common, taken from the high to the low of wave A. In this scenario, you then want to see a wave C towards the downside, which is an impulsive structure, where the most common target for C is between the 1 and the 1.236, taken from the high to the low of A to the high of B, which is between 34K and 33.6K, which is nice because that also then means there's a couple of lows here and some liquidity that price can take before then a reversal towards the upside and continuation of the bigger trend. Now, in this particular scenario, we are looking for a zigzag. So in this scenario, we have a bigger WXY, which is a complex structure, very much a wave 4 type of structure, after which we then expect continuation to the upside. Because wave W is a flat over here and an ABC running flat, wave Y is not allowed to be a flat, so therefore it then has to be a zigzag in an ABC 535 zigzag. So the difference between a zigzag and a flat is a 335, zigzag is a 535, but you both label them an ABC. So in this scenario, 535, looking for this wave C, where this wave C is taken also from the high to the low to the high of B and basically has the same target. And I just noticed I actually have to move this to the upside, but the target is the same as the other one, 34K to 33.6K. After this wave C is in and therefore wave Y, you then expect continuation to the upside. Now if we go to the micro time frame, then actually over here I did my analysis just before price moved to the downside, where the expectation was to grab this low over here because price hit the 886 twice, taken from the low to the high. Price came down, hitting the 886. Of course, probabilities increased to then take the low anyway. But then when price hit the second low over here, when I was doing my analysis, probabilities increased to take this low, which it has now done, as you can see as well. The thing is, more locally here, this looks to be a three-wave structure to the downside, and that supports bullish scenarios, of course, because here you can see it's very much a three-wave V structure and not a five-wave structure. And in the bearish scenarios, in an ABC flat or in a zigzag, you want to see a bearish wave C towards the downside, which means impulses to the downside. And over here at the moment, looks like a three-waver, ABC. If you take a fib from the high over here, from the high to the low to this high, then the one-to-one has been very nicely respected indeed, which increases the probabilities. This is an ABC, which therefore increases probabilities that price will eventually move back towards the upside. If we have a look at this range, this one is important. This is a range taken from this pivot to the right side, right? Extended to the right. And what you can see is we moved above the value area high, came back below, start to also build some bearish CVD divergences, which have now played out, by the way. But we are now below the value area high again. And there is, of course, now probabilities to then move to the point of control, with the point of control sitting at 24.7K. Also interesting here, and is very, very important, is this gap, right? So we had a big move towards the upside, price forming this gap over here, with this being a absolutely key level at 35,114. This level over here is important because usually for the first time, if price hits a gap, there is some support, it acts as support. But the moment you start closing candles in here, or you come back again and start to close candles in here, probabilities really increase to fill the gap, which then kind of means go to the point of control, which really adds to the probabilities of the bearish scenarios, where this move over here to the downside is then still somehow a 5-wave structure, not a 3-wave structure, right? So this gap is very, very important, as it will give us a lot more information about what price wants to do. If we then look at the CVD divergences, we do have some bearish CVD divergences, nice Kun. And over here, the bullish CVD divergences have been invalidated at the high. That was quite interesting. We made the high over here, moved down, moved up again, bearish CVD divergences. Some bullish CVD divergences over here, but they never played out. We never took this high because price eventually started to create bearish CVD divergences for then a move again towards the downside. And if we then finally go to the probabilities of the different scenarios, then on the low time frame, I'm actually quite neutral. When we look at the bullish scenarios, of course, it's not ideal that we didn't necessarily had a contracting diagonal, and in this particular scenario, wave 2 retracing to the 886. So the preferred bullish scenario is this one over here, where we're then looking for a 1-2-1-2 and then continuation to the upside. We did enter the value area again, of course, so we definitely want to escape this value area and move back above the value area high. And the move down that is supported for the bullish scenario, the move down over here so far looks like a 3-wave structure, another 5-wave structure, which would support the bullish scenario, as of course you want to see corrective structures from the high to the downside and not impulsive structures to the downside. And an impulsive structure always needs to be a 5-wave move. So of course we're going to continue to observe the reaction that we have over here. Now, what is very important for the bullish and bearish scenarios, in my opinion, is the gap that we have. So if we open this again, we have that key level at 35.1K. We have the gap over here, which is very, very important indeed for price to hold, in my opinion. The moment you enter this, probabilities increase to go to the downside. And that also means you're going to give probabilities to the bearish scenarios, because we've been in this range over here for a while. Of course, if you look at the target boxes, this is now an important support resistance flip. And if you now again move inside this area, probabilities increase, you're just going to move back towards the other side, right? In this basically support resistance area that we had for a while now. So that is something to keep your eye on, especially that gap, very, very important. Staying above that gap definitely increases probabilities for bullish continuation, also with the 3-waver to the downside. And on the micro, well, you know, I had the plan, but it's played out just while recording. The higher probability was to take this low over here because the 886 was touched multiple times. And then again, staying above the gap is bullish. Moving inside the gap would be bearish. So we got to wait and see now what this range locally is going to give us. The fact that price over here moved down in a potential 3-waver and took the low now does increase the probabilities for price to move to this key level, because the reason is, if this is a 3-wave structure and you look for bullish continuation, you now want to see an impulse to the upside, which means this low is not allowed to be taken. So the fact that price came down and took this low does increase the probabilities that even with a move to the upside, you're gonna find another move to the downside at least once more to hit this key level. And then we have to really pay attention how price is gonna react over here to determine the probabilities of the bullish and the bearish scenario. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.